Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the data is in, and once again, we're going to go over Zillow's extremely bullish forecast in the housing market. And don't forget, you guys, when everyone was still making money, Zillow lost hundreds of millions of dollars by freaking out and selling a bunch of their properties through their iBuyer program at the end of 2021. Do y'all remember that and how much money they actually lost? And the interesting thing is the market actually rebounded significantly and they missed out on tremendous opportunities. Come to find out, Zillow had actually purchased many of those properties through their Zestimate, through their Zestimate valuing property. So anyways, not only am I going to jump into the forecast, I'm also going to jump into what they believe is going to happen next with the Federal Reserve. Obviously, the Federal Reserve is apparently fighting inflation. So we're going to dig into a bunch of things Zillow today. Let me know how you guys feel about the article. But don't forget this, you guys. Like this video, subscribe if you haven't already, shoot me a comment below. And either way, you guys understand this. I'm not a financial advisor, even though my bio is as a realtor, loan officer, and instructor in Texas in real estate. And I had a bankruptcy, foreclosure, repo, and tax lien back in 2009 through the great financial collapse. So my opinions are based around those things. But either way, the name of the Zillow article is Zillow Home Value and Sales Forecast June 2023. And remember, you guys, last year, they were wrong pretty much the entire time. I believe the same thing's going to happen this year, just as soon as we get through this insane seasonality of home buyers. Couple bullet points. Zillow's latest forecast calls for home values to grow 5% in 2023. Low inventory continues to push upward on prices and appreciation expectations. The thing is last year, again, we had deflation in the housing market exceeding seasonal trends, and interest rates were lower than what we have now, and inventory was actually also lower than what we have now. So they're saying, despite that we're going to finish the year with growth of 5%. And again, remember, last year they were wrong. They were right the first few months, like a lot of people have been right from about March to June of this year, because again, that seasonality, that fear of missing out was back in the housing market, and it was inflated by the lack of listings. Either way, let's get back to this. Zillow also forecast 4.2 million existing home sales in 2023, a 17% decline in 2022. So in essence, they're saying transactions are going to continue to crash. So again, transaction crash, it's going to get out of control. We're probably weeks away from that happening. If not weeks, the most a few months. Zillow's expectations for the nation's typical home value was revised upward. So again, they're just jumping on the bull bandwagon. Zillow forecasts the National Zillow Home Price Index to end 2023 5% above where it began this year. That's an upward revision from last month's forecast, which called for 3.9% growth in 2023. I mean, can you guys see the bullishness just screaming off of these pages? They went from 3.9 to 5. It's just like, Zillow, calm down. We haven't even got through the seasonal declines yet, which where I believe is going to be even sharper than last year, which again is breaking seasonal trends as evident in the Case-Shiller Index. Inventory conditions were the primary driver of the upward revision. The number of active for sale listings in May was the lowest for that month in our record's history. And you guys, it was super low and also super depressing, which dates back to 2018. The shortage and the persistent trickle of new listings entering the market, spurred by the fastest month-over-month home value appreciation in nearly a year, not the fastest, but just in almost not a year, but almost a year. Despite the limited options, buyers remain eager to snap up homes at a decent rate. And I'm not going to say eager. I'm just going to say that some new home buyers have that fear of missing out and are on the bull side of the coin. A lot of buyers think that if they don't buy now, things are just going to get more unaffordable and they're going to miss out on opportunities of home ownership. But the reality is home ownership right now is completely broken. And honestly, it's very risky. Newly pending sales, a measure of homes that went under contract in May, rose at a stronger rate than the market tends to see this time of year, even as mortgage rates remain elevated, presenting affordability challenges for many, and I'm just going to say for like everyone unless you're ultra rich. Zillow's forecast for existing home sales this year was revised downward. What? So they had a revision upward and a revision downward, which again is basically them acknowledging that the housing market's all messed up right now. And honestly, if we just had more inventory and we didn't have as many people buying right now, things would be better off. But not only that, remember the $400 billion of liquidity that was injected into our economy that has spread to every sector in our economy just happened in March of this year. To be clear, what I'm saying is they did quantitative easing in March of this year for hundreds of billions of dollars. Changed my mind. Zillow now expects 4.2 million home sales to occur in 2023, down slightly from last year's projection of 4.4 million, which would represent a 17% decline from 2022. Expectations for modest declines in mortgage rates should stoke home buying demand some, but low inventory and higher prices will likely offset these impacts, limiting the potential for sales. But let me take you guys into another article from Zillow right now. Incredibly optimistic and bullish about the housing market. So danger, Will Robinson, danger. Now, the name of this article is Inflation Cooled Further Ahead of the Next Interest Rate Decision, but it did not cool further in the housing market and in shelter. It actually got worse. What happened? The Consumer's Price Index, or CPI, this is not core CPI, rose 0.1% in May after increasing 0.4% in April. Core CPI rose 0.4% month over month, as it did in April and March. What it means, annual consumer price growth continues to slow, and non-housing services inflation has cooled substantially from an annual pace of 7.2%. Again, who cares? It's non-housing. You know what I'm talking about? Like Zillow. Why are you talking about eggs and bacon? Why aren't you talking about where the inflation is sticky in the housing market, in shelter? Stick to that, because that's why people read your information. Am I wrong, guys? Who cares about eggs? I'm sorry. What Zillow senior economist thinks. Today's report was good news on the inflation front. The pace of consumer price increases is slowing. Despite the deceleration, core inflation remains high, and shelter costs are still the largest contributor to the core CPI monthly gain. So there it is. Maybe I was a little bit premature, but I just want to make clear. CPI shelter is only 10%. So in CPI, shelter is only 10% of that. But in the important one, which is core CPI, it's actually 40%. That's why they see core CPI, it's still super bad. So thank you for acknowledging that, Zillow. Let's see if they remain cautious. Oh, it doesn't look like it. However, relief should be on the horizon. Why is prices crashing? Annual increases in rent on primary residence and owner equivalent rent of residence peaked in March and April and continue to edge down. Annual growth on the Zillow Observed Rent Index, a measure of market rent, has fallen to 4.8% from its 16.9% high in February 2022. While this is welcome news for renters struggling to afford rent, it also means the CPI rent and core CPI overall should moderate further as the year progressive. And honestly, I really feel like that's true because of the commercial real estate meltdown right now. There's a lot of vacancy right now in commercial residential real estate. So the apartment complexes, and not only that, owners are converting their primary to rentals. Everyone's trying to rent out a house right now. And we can see that because rent strength is faltering. With housing inflation expected to continue to fall, which it has not fallen March 2023 and on, we have runaway inflation. We did have deflation starting around July of 2022. Further disinflation in the coming months should drag down longer-term treasury yields, which mortgage rates tend to follow. So at least they're acknowledging that, you guys. That's a long way for Zillow to come. And that's exactly what I'm saying. We're a few weeks away, you guys. Again, we're a few weeks and at most a few months away from that seasonal decline. But the thing is this time it's going to once again, like last year, break normal seasonal decline for many factors: quantitative tightening, unaffordability, high interest rates, and things of that nature. And during that period of time, we're probably going to see commercial real estate as well start to melt down. So a couple numbers to consider. The Consumer Price Index, or CPI, increased 0.1% over May after increasing 0.4% in April. Consumer prices were 4% higher when compared to a year ago, down from 4.9% in April. I want you guys to understand this does not mean prices are going down. What this means is they're not going up as much. Core CPI increased 0.4% in May and is now up 5.3% from a year ago, down from 5.4% in April. So core CPI is barely going down. Again, a big difference from core to just normal CPI is the housing market takes up 40% of core CPI. And that's why we're seeing core CPI so slow to come down. Rent or shelter inflation is now up 8% from a year ago, down from 8.3% in March. Last thing, the shelter component of CPI still leads the price gains. That's horrible. However, the annual increases in shelter costs continue to fall as predicted by the past year's slowdown. In conclusion, I want you guys to understand that I am just sharing my opinions. And when it comes to purchasing the largest transaction of your life, that's a decision that you have to make. And if you are in the market and you are trying to find a house right now, the only thing that I would say is do the absolute best you can to make sure you can comfortably afford the house, right? Maybe 25% of your net income goes towards your mortgage, but also make sure you love the house, because odds are you're going to be staying in that house trapped for an extended period of time. But the biggest thing that I would say is just have the right expectations of what's going to happen next in the housing market. And at the very least, we can all pretty much bank on the fact that equity at the very least is going to be sideways potentially for years to come. So if there's any type of job loss, if there's any type of medical emergency, if you have to move for any reason, understand that in these years of declining house prices or even plateauing house prices, that puts you at tremendous danger of foreclosure and default. And another strategy that I ask people to use is your rental analysis to make sure that if you do have to move, that you can rent out your house and still cash flow. Because odds are if people have to move because they can't afford the house anymore, they could probably not afford to be a landlord either. Being a landlord is an expensive practice. So it's especially important that whether you're a homeowner or you're a renter right now, that you are saving your money. And don't forget this, you guys, even though we have all of this out of control inflation, if you have money right now, we finally have the ability to save our money and actually yield 5 to 6% on an annualized basis on our money. Now, I'm doing that personally. I go through Treasury Direct. I buy 1 month T-bills every week. So every week I have that 1 month T-bill maturing. And it's a really good way to help my family and I get a few $100s more per month to help offset the inflation. Now, other than that, guys, I really hope you enjoyed this video. I also hope you guys got some new value, insights, and perspective. And if you're out there investing in real estate, you know I wish you luck, and I hope you win.